Hello and welcome to Smartkarma's corporate webinar. I'm Sanam Nanwani from Smartkarma. This week, we are hosting Centurion Corp. We are glad to have with us their CEO, Mr. Kong Chee Min. To kick things off, we will start with a brief industry overview presented by Smartkarma Insight Provider, Angus Mackintosh. Following that, Mr. Kong will walk us through a company presentation and engage in a fireside chat with Angus. We are taking live Q&As, so I would like to request our attendees to post your questions in the Q&A tab at the bottom of your screen. During the webinar, we will also share some links on how you can connect with Centurion Corp and read more research by Angus, so please do keep a lookout for messages in the chat box. But that's not all. Make sure to stay with us until the end because we will be concluding today's webinar with a lucky draw. One lucky winner will receive an Amazon Kindle, so do stay on till the end for a chance to win. Without further ado, I now hand it over to Angus to take us through the industry overview. Angus, please.
So I'm going to start off just talking about, very broadly, what is purpose-built worker accommodation and purpose-built student accommodation, and what are the main factors, driving both those segments, which are becoming increasingly interesting, especially in the markets that we're talking about today for workers' accommodation in Singapore and Malaysia. So let me start off talking about Singapore. Singapore basically requires large numbers of migrant workers to support, construction, shipbuilding, other processing industries. And it's those construction, shipbuilding, and other processing industry workers that require dormitory type accommodation under government rules. So there's increasing demand for purpose-built worker accommodation, from those industries. And construction in Singapore has been seeing continuing, strong investment every year. You're also seeing increasing pressure on governments and multinationals to provide, better quality accommodation, taking, worker welfare very seriously. International labor organizations, responsible business alliances, etc., are putting pressure on companies and countries to provide, a good quality, healthy worker accommodation. There is also, quite strong regulatory pressure in Singapore and in Malaysia to make sure that private actors in that sector are adhering to the regulations, and new regulations have actually been introduced recently into Singapore and into Malaysia. So strong demand for high standard, purpose-built, professionally managed dormitory type accommodation, which is still facing an undersupply. So you've seen in Singapore a number of short-term solutions being put out there. So quick build type worker accommodation being built as a kind of short-term solution to the demand for dormitory accommodation. Foreign workers also, which obviously influx of foreign workers is what's driving demand. Foreign workers in the construction, marine, shipyard processing space continues to increase. And in fact, in 2023, it increased by 6.2%. You can see this, from the Ministry of Manpower numbers. If you look down there on the bottom right, these are the work permits being granted. Now 441,100. So it's a big number relative to Singapore's population. So all these dormitories has to adhere to certain requirements put in place by government agencies and so on: fire safety, minimum living space, which is very important, what we're talking about today, hygiene standards, number of workers per room. These are all important factors. And the regulations have been updated last year to encompass around 1,000, around 1,600 dorms. Prior to the 1st of April last year, it was only 53. So there's a lot more scrutiny on the overall sector in Singapore. There will also be, I think, some time given for the new regulations to be implemented. We could probably hear about that a bit more a bit later. So the government is increasingly looking to the private sector as well to build out these new purpose-built worker accommodation. In Malaysia, it's actually a much bigger market, but probably one which is slightly more embryonic in terms of regulation. There are roughly, I say roughly because there are quite a lot of unofficial migrant workers in Indonesia, about 3 million migrant workers in Malaysia, I should say. About 400,000 of those are working in the construction sector, was one of the highest growth sectors, as part of the economy. But you also got manufacturing employing, double that number of 800,000, and a large number of people obviously employed in the plantation sector. But these are all the difference. The Malaysian regulations is that their worker accommodation rules and standards apply to all workers, not just migrant workers. So the Singapore rules are much more focused on migrant rate workers, but there's still a lot of upside to the supply. There's a lot more supply rather required in Malaysia, for migrant workers, mainly being focused in areas like Selangor, Johor, Pahang, where there are large industrial parks and manufacturing facilities. So that's a bit of a backdrop on the worker accommodation. The student accommodation is also a very interesting area, and one which is attracting a lot more institutional interest, because it's seen as an area where you can have very high rates of occupancy in kind of student centres and university towns and so on, and colleges. You have a captive student population. There's still growth in the number of international students. So the shortage of good quality purpose-built student accommodation. And traditionally, the students who come in and as I did, lived in university halls, which were pretty poor quality. But now, and there's a private rental market which is slightly isolating. So the idea is you bring students into purpose-built student accommodation. It's designed with students in mind. It gives them access to other students, and that's what university is all about to some extent. And also gives them access to palliative care and access to advice and all that kind of stuff, as well as sort of sporting facilities and everything else. So it tends to be a bit more expensive, in fact, than traditional student accommodation, but it gives the students a lot more. And for foreign students, obviously, it's a much better place to be if you're new to a country and so on. Much less isolating, and much better in terms of socializing with other students and so on, which providing a safe and secure environment for all sorts of reasons. And looking at sort of the numbers, I mean, the main markets for some of the biggest markets for purpose-built student accommodation are the developed markets, where you have high quality universities and colleges with large numbers of students from overseas coming in, and in fact domestic growth in student numbers as well. So Australia, the UK, and the US are all very important markets with strong growth, and a shortage of these purpose-built student accommodation. I think the UK is ahead of Australia by quite a long chalk. I put some numbers on the presentation here, which you can get later if you'd like it. But Australia, I think there's one purpose-built student accommodation room for every 16 students. I think it's 2 or 3 in the UK, but that's risen very, very quickly, and it's become an investment class as from a property perspective for investors, because it has such high levels of occupancy, and you can see also rental reversions every year, given that there's a shortage in supply. But on that note, I'm going to stop there, and I'm going to stop sharing my screen and hand the one second and hand over to Mr. Kong to talk about Centurion, which is what you're all here to listen to.
Okay, good evening, everyone. Thank you, Angus, for the good introduction. So with that, I believe I can skip a few slides to catch up with the time. Thank you very much for joining us today. My name is Chee Min. I'm the CEO for Centurion Corporation Limited. So what we'll do is that very quickly, over the next 10 to 15 minutes, I'm going to go through a corporate overview of our introducing Centurion, then goes into business outlook, financial highlights, and also looking ahead. So for Centurion, as what Angus said, we own, develop, and also operate quality specialized accommodation properties worldwide. And what does that mean in terms of specialized accommodation? We have 2 pillars of we call it our core business, one of which is a purpose-built workers accommodation, in which we have 17 operating assets in Singapore and Malaysia. As for purpose-built worker student accommodation, we have 17 operating assets in all the renowned education hubs such as Australia, UK, and also US. and both asset class has actually being very resilient, backed by strong and stable demands. In Centurion, we operate and establish two brands and to operate our assets. One is Westlite, which is for workers' accommodation, the one that you can see on the right, and Dwell for our student accommodation. So these established brands and management platforms will enable us to grow our assets under management by the asset-light means, which is actually our strategy going forward, and also establish investment management platforms to manage third-party investors' assets. Both properties are stable, stable and resilient property asset class with very positive demand and supply dynamics. And this has been proven, which I'm going to elaborate later on under our other slides. So with also a stable and experienced leadership in the senior management level and mid-management level, with average about 20 years in the industry. So Centurion has a diversified portfolio, not only just on asset type, but also geography. We have about 2 billion assets under management, 67,000 operating beds in terms of capacity, over to 34 operating properties in 15 cities over 5 countries in the world. Okay, in terms of financial performance, the track record, as you can see from the screen, right? We started in 2011 with only 5,300 beds, and since then we have been growing leap and bound, and you can see that the revenue has been growing with a CAGR of 26%, and also the net profits has been growing at a rate of 25%. So from what you can see from the chart, we have been growing year on year. And the point to note is that even during COVID times, our net profits has actually continued to grow from 2020 to 2022. That's the particular period during COVID. So that demonstrates the quality earnings from this special asset class. And despite of the pandemic, we are able to deliver good results. A bit of business outlook. Okay, so this is just a glimpse in terms of what the workers' accommodation is like, the portfolio that we have. We have 17 purpose-built workers' accommodation, 62,000 beds spread over Singapore and Malaysia, 9 in Singapore and 8 in Malaysia. Right, I won't go into the details, right? But as you can see from the left, in terms of the footnotes, we have been growing our portfolio, and also we have a pipeline to grow these assets by AEI on these assets that we have in our portfolio. Okay, this slide is talking about the landscape, which Angus has actually covered very comprehensively. I won't go into that, but the drivers are basically for workers' accommodation is all about not only the there are a huge demand of migrant workers to spur economy for various countries such as Singapore and also in Malaysia. There are other countries as well, similar to Singapore and Malaysia, just like the Middle East. And this is actually a very highly regulated business, which actually stack up for us in such a way that the supply is controlled and also the demand is controlled, and that poses good supply and demand dynamics for us. Okay, for performance-wise, PBWA, we have performed very well in 2023 with strong financial occupancies and also positive rental rate reversions. Financial occupancy for 2023 in Singapore is close to 100% and 98%. For PBWA, it's actually 93%. In fact, it's higher than that. because some of the assets is under AEI, which is why it's actually 93%. So demand is expected to, going forward, remain robust due to the demand and supply dynamics. In fact, there are a lot of jobs, or rather, the Building Construction Authority has mentioned also that there are increase in the number of contracts until 2028. In terms of our outlook, we do have an active pipeline and plans for portfolio growth in 2024 and also beyond. 4,300 beds will be added in financial year 2024, with one Westlite UB development in Singapore, and also AEIs that we expect to do in Malaysia. So there are also a development pipeline that we have put in place to add another 6,400 beds by 2026, and that has been set under motion right now, and that would actually and is construction in progress. Okay, we also have a strategy to recycle and redeploy capital, right, by the asset-light means. And in 2023, we have also announced that we enter into a sales and leaseback agreement with Corp, which is actually a Malaysia employees pension fund, right? And this has proven the resilience or the asset class is being also recognized by big institutions. Now, for student accommodation, okay, this is actually our portfolio as well. Just to give you a glimpse, we have 70 purpose-built student accommodation across in UK, Australia, and US. Just a point to note that US, these 5 assets are under, I would say, is under a fund in which we only have 28.7%, but this is what we manage for the fund. Then we will earn asset management fee and also property management fee. Okay, so PBSA, I will skip this slide because of the fact that just now Angus has actually covered very comprehensively in terms of the landscape and supply demand dynamics. Okay, this PBSA. Okay, so this PBSA, sorry, there's a typo there on top. So for 2023, for the UK, we have a 98% occupancy rates, while Australia is 88%. The reason for Australia is because that Australia is the last territory that comes out from COVID, which is why during that year it was affected, but it's still a very healthy occupancy of 88%. And this is driven by the demand supply, as what Angus has mentioned. And because of the supply has not being able to catch up with the demand, and this is where there's this underserved part of it, and we play, or rather this location presents a very good opportunity for us to grow. Okay, so demand has been strong, as what I think Angus has mentioned, so I wouldn't go through again. But asset-light strategy is something that will enable growth for students as well, not only just workers. So we have 5 assets under US, as I mentioned, under the fund, which we own 38.7%. And also there's another fund that we hold, which we have 1 asset in Nottingham, which we own 14.29%, which we extract management fee on. So very quickly, financial highlights. 2023 revenue has been very strong. It is actually a record year for us at 207 million. It is an increase of 15% year on year. That is also that's driven by the strong occupancy and also a strong reversion of rental rates across all PBWA and PBSA within the group. The revenue, that is despite the fact that the revenue has actually been partially offset by the cessation of 2 onboard centers in Singapore. NPAT wise has grown phenomenally, 131% to 175 million in 2023. The drivers are high revenue because of the increase in occupancies and also the positive rental rate reversion. There's also a huge due to the positive markets and also the rental reversions, we also able to book or record a higher fair valuation gain for the group in 2023. Similarly, for our associated companies as well, it has actually recorded higher fair valuation gains in investment properties. And this has actually partly, or I would say, offsetted by the higher finance costs, because you know that the interest cost has actually climbed up, as well as inflationary costs. But if we do exclude all the fair valuation adjustments, because those are really one-off, I would say, I mean, not that recurring, but our recurring profits, which is actually our core, from our core business, is actually at 76.3 million. That is a very healthy growth of 20% year on year as well. For balance sheet, we have a very healthy balance sheet with a cash of 74.7 million, and that is 9% growth year on year. And that is because of the increase in, or rather, better operating performance. Current assets has grown quite a fair amount, which is 78%. That is because that we did a sale of the 2 properties, which you mentioned. We did a sale of 2 properties, which we wanted to do recycling of capital, but we also do a lease back, which is where our asset-light strategy, and for 15 years, and these 2 assets will give us recurring income for the next 15 years to come. So current liabilities and non-current liabilities, and current liabilities increase is also is more because of the increase in our occupancy, and therefore the rental deposits has increased. For the non-current liabilities, because we continue to enlarge our portfolio through development, but usually the non-current liabilities will drop because of the fact that we continue to repay our debts consistently. The gearing is quite healthy. It has actually dropped 5 percentage points. Average debt maturity is 6 years, and interest cover is well within our threshold at 3.6 times. Some key ratios: earnings per share is 18.21 cents. That is a growth of 10 cents. That's quite phenomenal. Earnings per share from core business operations is 8.23 cents, a growth of about 1.44 cents. NAV is at 98.21 cents as compared to our share price as at 31st December, 40 cents. I believe now it's about 43 cents. And dividend, we have, because of our strong results, we have actually declared a dividend of 2.5 cents compared to last year of 1 cent. That's also a big growth. And market capitalization is at 341 million. Looking ahead, okay, we expect that the market, or rather our assets, to do well because of the positive demand supply dynamics, and also the rental reversions will also carry forward, and I would say that will benefit us in 2024 and onwards. But however, the group is also mindful that the persistent high interest rates, even though everybody talks about interest rates will go down, but we believe that the interest rates will stay relatively high, inflation pressures as well. So we will continue to be prudent in terms of financial management, and also to mitigate any economic uncertainties from in these inflationary pressures and rising interest rates. We will continue as far as a strategic plan to enhance our portfolio and enlarge our portfolio bets through organic growth by doing AEIs and also acquiring of land and do development, right? At the same time, the group will continue to look to do a strategic review of our portfolio, so much so to execute capital recycling reallocation towards higher yielding markets and assets to deliver sustainable value to shareholders. And that's all. That's end my presentation, and thank you.
Thanks very much, Yumin. That's yeah, very interesting, and you know, obviously you've had a pretty good year in 2023. I might just sort of take one step back, just for people who haven't you know had exposure to Centurion before. I mean, you are the largest, you know, purpose-built worker accommodation provider in Singapore. Could you take us a step back? Because you started quite small. What were the initial reasons for entering into this sort of segment of the property industry? And you know, why was it just something you saw as a very strong growth area? And when you entered, was it dominated by the government building worker accommodation? Could you give a little bit of background? It'd be fantastic.
Okay, just a bit of background. Of course, the company started, actually this listed company started in 1984. We do optical this manufacturing actually, and from there too. And in 2011, because the event of the change of technology and all that, so storage media is actually a sunset industry. So we are looking for a new business to go into. And we stumbled upon this business, which our controlling shareholder has one dormitory, which is actually 5,300 beds. Then we look at the business. We feel that it is the market, even in Singapore, there is a lot of opportunity to expand. Reason being is that that time the demand, or rather the supply is relatively short. More importantly is that we feel that this model can scale, not only just in Singapore, more so in overseas as well, particularly our neighboring country, Malaysia. So we take a step in terms of going into this business, and we have made our plans work in such a way that since then we have never looked back, and this is we have grown from 5,300 beds to 62,000 beds right now. Apart from that, we have looked at also other asset class, which is very close to workers' accommodation. In 2014, we went into student accommodation, right? After doing a fair amount of research, because this asset class is as resilient as the workers' accommodation that we have started with.
And is it? I mean, just to give a bit of a flavour about the competitive environment. I don't know if you have any kind of what you'd see as market share numbers, or you know, how does the competitive environment look? Are other? I mean, obviously it's an attractive area to get into. Maybe it's not that easy to operate, and you've got to be very sort of close to the regulatory environment and everything else. What's the competitive environment look like?
Okay, in terms of market share in the market, I believe we would have about, okay, we in Singapore we have 34,000 beds, right? Of course in Malaysia we have about 27,000, but that is actually, I would say, the leader already. I mean, the market is very small. I'll rather not say, I mean, is we don't have much competitors, I would say, in Malaysia. But in Singapore, there are quite a fair amount of competition. We have 34,000 beds, over 200. Probably we would have about 50% in terms of market share. But we are already the largest in Singapore. But the competition is actually not. I would say the competition is quite keen in this sector, particularly micro location, right? In terms of this sector, so you need to do very well in order to be in the business. It's also quite challenging in doing this business, and you need a lot of skill sets to handle them, because for the bigger dormitories, we are talking about one dormitory about 9,000 residents, right? And over about 6 to 7 different nationalities. So so this is the business that we are at. Competition, yes, but we are able to, I would say, charge or rather a premium compared to our competitors, solely because that we are able to manage their workers better, and their workers like to live with us, and therefore year on year, despite the fact that the competition has been very keen, we are able to our occupancy rates are relatively high compared to our competitors.
Right, very interesting. We've got a few questions coming in, which Mike, because they're coming in quite quickly. So I'll just flick to the first one, which is more of an overview question. We can go back to talk about the worker accommodation in a second. It's from Edward Slade, and he just saying, can you give us a split between purpose-built worker accommodation and purpose-built student accommodation in terms of assets and revenue?
Okay, we never okay. Okay, maybe I give you a rough split. The split is actually 30% in PBSA. For PBW is 70%.
Revenue.
Right? Revenue. Yeah. In terms of
bed capacity,
terms of bed count, in terms of assets, I think he's talking about assets, asset value. I believe he's talking about asset value.
Assets and revenues.
Yeah. We do have a slide on that. Okay, so for 2023, for
can you jump in the pie chart?
do you have the pie chart there?
It's
In the slide?
in the wheel.
I think it's talking about value. Sorry, I think asset value is also about 30, if not 40%, because basically the numbers has actually been changing, whereby we have the property value has actually appreciated for workers' accommodation due to the valuation gains, right?
Okay.
Is
I
that
think that's a pretty good indication for Edward. Let's just keep going on the purpose-built worker accommodation, and just to give us an idea of the main factors, driving the demand in the space. Is it really construction contracts? I mean, what do you see as the risks in a sense to the growth over the next 2 years? Is that very much due to geopolitical reasons, or what would be the main sort of drivers and behind the growth?
Okay, if you are talking about the business, in fact, the sector that we are in for construction, for our portfolio, the construction industry that we are housing, or rather the workers in construction industry is about 52% in our portfolio, right? And then there, after that would be
manufacturing.
Yes, manufacturing and marine.
Yes.
Process. I'm sorry, it's process industry. Then manufacturing, right? That forms up the rest. So we are not really sector concentrated. Most of our assets, or rather our PBWA, can take in different workers. So in the past, when there is a sector that is actually not doing well, we are able to fill up the space with other sector workers from other sectors. So I don't see that that's really a main risk in terms of if there is any sector that is actually not doing that well, which is why our workers' accommodation is very, very resilient. That's being said. Yeah.
And would you? I mean, obviously, there have been a lot of there's been a lot of construction from the government in Singapore of new MRT lines and so on, and that's still ongoing. I mean, what would you say is the split between workers going to work from government projects and private sector projects? Do you have that split, or is that something, or just a general kind of feeling for what those two drivers might make up in terms of demand for workers?
Okay, I don't have the exact numbers because most of the companies, or rather the contractors that we have for construction industry, I'm saying, they do both, right? They do infrastructure projects, and also they do residential projects as well. So I don't have that split, but generally, I would say that the construction industries, whether is it from infrastructure or even process industry, they also have infrastructure construction as well, because they do build up in terms of their plants, etc., etc. So I would say that both industry, whether they grow or not, it will benefit us lah, because we don't really bother whether they are from infrastructure or from residential construction. Yeah.
You're quite well diversified from a demand perspective across industries and also between government and private sector. That'd be fair. Would that be fair to say?
Yes.
Yeah. Okay. Just move on to the sort of the knotty subject of regulations, because that can obviously have an impact on the type of worker accommodation that you're providing, and that you may have to change and modify existing assets. I mean, how do the recent changes in FADA regulations impact you? Is there a need to densify properties as part of that sort of regulatory regime?
Yes. Okay. What the government has actually announced just recently, last October, right? Last year, October, there's a transitional standard that they actually announced, whereby existing buildings like us or existing dormitories has to comply with the transitional standard of 3.6 square meter, right? There are other requirements as well, toilet ratio, isolation base, and all that. That actually does actually improve the living standards of the welfare of migrant workers, particularly during a pandemic. I believe that helps. So we welcome in terms of the transition change. But we are also concerned that with this change means that there are an impact in terms of a reduction of bed capacity to our existing dormitories. So what we have planned is actually to do redevelopment or development on particularly two big assets that we have, Westlite Wanda and Westlite Toguan, to recover beds, right? These two development will add 5,000 beds, and these 5,000 beds are meeting new standards, right? Not the interim standards at 3.6 square meter, but meeting 4.2 square meter. And we believe that these assets, by meeting the standards early, would actually benefit the group in terms of revenue wise, because these are better quality, plus also the fact that these new beds can be used as swing sites for us, because during the dedensification process there is a retrofitting requirements as to upgrade our units in the building, and because of that we will have to evict workers from one to the other. So with these swing sites, we are really minimizing minimizing disruptions during that period, and also reduce impact on revenue loss during that period.
Right. So there's a redevelopment or an asset enhancement going on, which will bring on new rooms, which are even more, even well ahead of the government requirement short term. But will you actually lose any rooms? If you look at the total number of rooms over the next 2 years, will you lose rooms, or will you still see increasing beds?
Not for the next 2 years. We don't see that because the transition plan starting, the government has actually announced to say that they will start to do this retrofitting or transition starting for 2027.
Right.
Yeah, and it's gradual, 2027 to 2030. So by 2030, every dorm will have to complete the retrofitting exercise, because the bed is relatively short in Singapore. So the government do need to plan which dormitory to start first, and gradually transit everybody to the new interim standards.
Yeah. And just very briefly on the quick build dormitories, which seem to be sort of filling a gap, where there's a lack of supply. You operate some quick build dormitories, and what's the planning behind those? Will they be replaced, or will those quick build dormitories run for some time to come?
Okay, so these quick build dorms are something that we have we won a tender for JTC. It's actually built by JTC. we have a master lease technically, right, from JTC to operate and for 3+1 years. That means effectively 4 years, right? But this QBD technically will expire at 4 years, right?
Right.
Because of the shortage of beds, we do expect that this QBD to renew on a year-on-year basis. And as you know that for 2027, apart from because of the dedensification, right, and also the retrofitting needs, there will be a shortage of beds, and we are optimistic that this QBDs will be extended on year-on-year, right, due to the shortage of beds in Singapore.
Right. So there's very unlikely to be an overabundance of new beds over the next few years. So effectively, the supply will be constrained, which should be supportive, for rental reversions. Do you have a kind of a guidance or a view on rental reversions? They were very strong last year, but can that sort of level of growth be sustained in terms of increased rental reversions?
I would say that last year the rents has actually hit the roof. The rents has gone up as high as 650 a bed, right? Pre-pandemic, we are talking about 280 to 300, right? It has actually gone up to that level. We don't believe that will be sustainable, right? Our bed rents is not at 650, by the way. We are not a price leader. We cherish customers, right? We gradually increase. We don't increase and spike that way. And our rates are never hitting 650. On average, now we are about 500, right? But we do believe that there will be some moderation in terms of this bed rents in the market, particularly those at the higher range, higher tier ones. Why is that so? Because the government has actually, MOM, I would say, has stepped in to address the acute short supply. They have actually included a fair amount, I would say, other alternate options of housing the workers temporarily. This includes building more on-site dormitories, and also increasing the supply or encouraging factory owners to convert their factory to factory converted dormitories. So that has actually have a positive impact in terms of reducing, or rather the pent-up demand, or rather the demand for housing. As you know that in Singapore, if you don't have a housing, you can't even bring the workers in to work, right? So that is actually a really a great impact to Singapore, and the government has actually stepped in positively to address that.
Right, but you do have so rentals may not go up as much as they have done. I mean, do you think they may come down from your perspective? What is your kind of outlook in terms of new rooms coming online, net new rooms, for the next 2 years?
In fact, for the next 2 years, there won't be a lot of supply. In fact, the government has actually announced, or rather they have released 3 plots of land, right? One plot of land, which is 1,600 beds in the east, which is a very prime location. We got the tender, right? The other 2 pieces of land that they have in total is about 10,000 beds. That is the government has actually decided to, I would say, operate and run themselves, to trial that, right? So that is actually run by MOM themselves. So that is 10,000 beds, but they have not actually started construction yet. So construction will at least take 2 years, right? So I don't believe that in the next 2 years there will be a lot of supply.
Right.
But what I think would happen is that in 2027, because now what the government is doing is that there are in the PBW space, there are permanent dormitories like us, which we own a lot of permanent dormitories. We have about 26,000 or 27,000 beds. We have freeholds, we have long leaseholds, we have those are really RC structure. But there is also a temporary space, purpose-built dormitories, which is really, we call it the 3+3+3. They are like on-site dormitories, but they are built with steel structures and all that, but they are not built to last. But because of the shortage of beds and this de-densification program that the government intends to do, so these beds has been extended. The lease has been extended, just like what I mentioned to you for QBDs. The lease will be extended. But one juncture, this lease will have to expire because the land could be zoned for something, and the government needs to use of the land. Plus also the fact that because of the foundation and also the structure, right? They can't be extended anymore. They has to be replaced. So during which particularly for the next few years, we would see that some of these dormitories will expire, right? And in 2027, because of the de-densification, bed will reduce, and we expect that the reduction will be close to about 15% generally, right? So there will be I would say the continued shortage of PBWA in the market. So we do believe that that is actually very healthy for this industry.
Interesting. Okay. Well, we're just in mindful of time, I think we should probably have a look. One more question in Singapore, which is actually also relevant to Malaysia, and what I wanted to ask you about Malaysia is regarding capital recycling. There's one question here. Do you see any, or do you have any plans to do capital recycling for your Singapore assets?
Okay, we obviously look at all assets, not only just Singapore. Those assets that we have currently in UK, Australia, right? Not just only workers' accommodation. Of course, Singapore, we will look at it as well. So what we are looking at is more towards are they stabilized? Are they matured in such a way that we could recycle capital? However, for Singapore, as you can see, that we are doing a lot of redevelopment at the moment, so it's not the right time to do so.
Right. No, that's fair enough. So Malaysia is the, and a bit in the UK, but Malaysia is the main focus in terms of, or has been for capital recycling. And just very briefly, I mean, obviously the Malaysian purpose-built workers accommodation market is quite big. And do you see it as a higher growth market versus Singapore, or are they both going to be likely growing at a similar pace?
Okay, I believe is that, or rather, because Malaysia is within our control to increase the bed count, right? We can buy a piece of land, we knew the expertise, we do the conversion, we talk to the relevant authorities and all that, because there's a short supply of good purpose-built workers' accommodation in Malaysia. But in Singapore, it's highly regulated. There's nothing that we could actually do on our own private initiative basis. It all depends on the government, land tenders and all that. So it's a bit more passive. So for Singapore, expansion is all about opportunity. But in Malaysia, it's more about what we can grow, right? So I would say, to answer you, the growth for the growth for Centurion will be in Malaysia.
In Malaysia, yeah. I mean, because obviously you've got some, you've raised some cash and have done a sale and lease back, so that potentially that capital could be redeployed, in Malaysia as a kind of first point of reference. Is that right?
Yes.
Yeah. Okay. Very interesting. Okay. There was one other question up here, just asking, will the company be focusing on purpose-built worker accommodation only in Singapore and Malaysia, or elsewhere? Okay.
So for Singapore and Malaysia, particularly Malaysia, there's already a lot of opportunities, as what Angus said. Well, there's a large worker population. So where we already have a foothold in there, we hope that we will deepen our foothold or footprint, I would say, in Malaysia. So while we do know that there are other locations that are also similarly have the same kind of demand and supply dynamics, like for example the Middle East, they rely a lot of migrant workers. Australia is coming to be as well, UK. We do know that there are such things, but what is important is that we are looking at scalability. Can we scale, right? Of course, Middle East we can, but we have to be cognizant about other geopolitical factors as well. So we take all these into consideration before we look at other countries.
Right. Very good. Well, on that note, maybe we should turn to look at purpose-built student accommodation, which is an increasingly interesting asset class and is gathering quite a lot of momentum in terms of investor demand. Where do you see as being the main? I mean, obviously your main direct exposures are in Australia and in the UK and obviously in the US it's through the fund. But what's your view on growth rates for Australia and the UK? Now you've seen, I guess, markets normalize, post-COVID, and I think you were talking during your results presentation in the UK about an increasing amount of demand for studios, rather than shared rooms. Are most of the student accommodation that you provide is it generally studios rather than shared rooms, or is it a bit of a mix?
Okay, maybe I should correct that. It's not that we are focusing on studios. In fact, in UK, we see that these studio apartments are actually oversupplied, because everyone is looking at that. Well, build more studios is also easy to manage, right? Compared to shared. But actually, the students is all about affordability also. On rents. And we actually promote shared rather than studios or cluster flats, right? Because quite a fair amount of students would like to stay with their friends together, right, as a cluster. So that's how the community and also the fun and life that they want. So the demand for clustered, I would say clustered flats or student accommodation format is still the better format going forward.
Right. And is taking that approach, from a yield perspective, do you get a better yield for a shared or cluster type of approach rather than studios?
Okay, studios yields are better.
Right.
Okay. Studio yields are better. I would say that because of the space, because of the management and all that, studio yields are better, right? But for clusters are less. That's why we in our accommodation we do provide different formats. It's not like the entire student accommodation is studios, even though the yields are better, right? So that is actually, we have to also balance the demand for this kind of formats as well. Particularly if studios are very, I would say, loved by Chinese students, right? Because they are a one-child family, usually they will want to stay by themselves, right? But when there is a downturn in terms of, or rather in terms of inflow in Chinese students, or even rich Chinese students, then this I would say student accommodation assets will actually be impacted.
Right. Now we're running very short on time. There's one question here from another from Edward Slade, just saying, can you tell us if there is any slowdown in student accommodation due to the visa crackdowns on students in Canada, UK, and Australia?
Yeah. So Canada, and I don't know because we are not there.
Yeah.
But for UK and Australia, while there is a crackdown, we noted that, but it doesn't actually affect. It's just only affect a small number of segment of students. But generally, the overall demand for students beds is relatively strong, right? As demonstrated that, in fact, our booking rates for the next academic year is very, very strong.
Right. So that's not something you should worry about too much. Yeah, I think we're sort of getting to the end of on time. I mean, is there anything you'd like to say on ESG, because that's obviously is a big factor nowadays in investment decisions. What is your sort of ESG strategy? I mean, I guess you are sort of a naturally an enabler for for workers in foreign countries, which is, you know, has a positive lilt to it. Yeah, what are your kind of main ESG, without going into too much depth? What would you highlight as the top sort of ESG strategy for Centurion?
Of course, now it's top of the town in terms of environment. We do have a strategy in order to, or rather we call it greening our buildings. We try to, or rather we manage, we do have a target that we have set for short term and long term to go towards net zero, even though I think this journey is going to be very, very tough, right? A good corporate citizen, we will similarly follow suit in terms of doing what is needed to, particularly for new developments as well. We are going for green certification, green mark SLE, and also for existing buildings, we are intending to do evaluation and do certification too. Of course, the other things in terms of reducing operating carbon, the use of the lower hanging fruit, solar and LEDs and all that's a given.
Okay. And you know, a few words on you know, on the outlook for this year. I mean, you've mentioned that you're conscious of potential risks going forward, but what would you like to say to finish off?
I must say that we do have a very active pipeline and a very conscious effort to enlarge our portfolio, and therefore these will be drivers going forward in terms of our increasing top line and importantly bottom line as well. In 2024, I would say that we will be at, I would expect that this will be another record year, right? For 2024. And as we mentioned about the demand and supply dynamics across all portfolios, not only just Singapore, we are quite optimistic that you know, the rental reversions will continue to be very positive, right? And not affecting the what's that called, the occupancy rates, and we should be able to maintain strong occupancy rates.
Very good. Well, thank you very much. It's been a very interesting conversation, and we've covered a lot of ground, and you know, very good presentation. At that juncture, I'm going to say thank you very much, and I'm going to hand back over to Sanam.
Thank you, Angus, for some very interesting questions, and a big thanks to Mr. Kong for a detailed insight into Centurion, the challenges in specialized accommodations, and opportunities that lie ahead for Centurion. Now, to add an exciting twist to our conclusion, we have a special treat for our live audience. It's time for the lucky draw, where one lucky participant will walk away with an Amazon Kindle. And the winner of our lucky draw is... Congratulations to KC Key. We hope you enjoy your new Kindle. Please be on the lookout for an email from our team. Great. As for everyone else who participated, we appreciate your active engagement throughout the webinar. Once again, thank you all for being a part of this week's corporate webinar, and have a great week ahead, everyone.